But look, I mean, I do think no matter how fast and how far gold goes, yes, I do think that the GSR will come back to a normal
Maybe
level.
you should say what the GSR is, because not everyone knows that lingo.
The gold-silver ratio is the ratio between how much silver it takes, how many ounces of silver it takes to equal 1 ounce of gold.
Right.
And I can tell you that for much of Andy's career, that number historically was about 40 or 42 to 1.
Correct.
We're right now sitting at about 85 to 1. Now,
what's it coming out of the ground at?
Well, right now it's coming out of the ground at 7 to 1, but historically it was coming out of the ground at 16 to 1.
That's for 5,000 years.
That's right. Correct. So we're getting less and less of silver. Right now, most of the silver is actually formed from a byproduct of other refining and other mining. So for us, we look at this and we say, okay, if right now we're sitting at 85 to 1, then, and the normal historical number is 40 to 1, well, that means that silver, because we don't think that gold is overvalued, we think there's a slingshot that could happen for silver to get back to that level. Now, there are a lot of people out there that you'll see numbers that they believe that silver should be trading at that number of 7 to 1, what it's coming out of the ground at in relation to gold. But right now, 85 to 1, that number is still completely out of whack.
So gold and silver are on the move like we haven't seen in years. Gold has already smashed through $3,800 an ounce, hitting record highs on a weakening dollar, mounting deficits, and surging global demand. Silver is racing close behind, up more than 60% year-to-date. And for many analysts, this is just the beginning. At the center of this story is the gold-to-silver ratio, GSR, how many ounces of silver it takes to equal 1 ounce of gold. Historically, that ratio sits near 40 to 1. Today, it's still around 85 to 1, a distortion so extreme that metals expert Andy Schectman says it can't last. He believes silver is primed for a slingshot move, potentially back to $100 or even $200 an ounce, and warns that investors who wait will miss the fastest part of the rally. So in this video, we'll break down exactly what's happening in the metals market right now, why Andy Schectman believes silver is about to explode, and how you can prepare before the ratio snaps back to historic levels.
To that point, Michael Oliver, who we've had on our show, he's a frequent guest of Liberty and Finance, smart man.
Very smart.
He talks about momentum analysis, and he says that the lid of silver is going to come off in a big way that few would expect to see, revising sharply upward. And he thinks that's going to happen over the next several months into the first quarter. He says the technicals of both price and long-term momentum are telling him that it's about to occur. In fact, he thinks it's already underway. He calls it upside verticality. What is that?
You know what? Photovoltaic. I mean, you have, those are the two.
Let's just say he thinks it's going vertically upwards. All right. I had this down when I was listening to it earlier. He's saying that in the next several months, he thinks that silver will accelerate, and he says if they move the way that they did in previous, like in the bull market in leading up to 1980, that he would expect at least $100 plus. And if you talk the 2010, 2011 price action, $200 is not out of the question. And so, you know, I think that is an important thing to keep in mind, is that he's talking about silver really, really slingshotting. And that is typically the way that it goes, is gold goes first, silver goes faster by a percentage basis, which could just like that flip the GSR ratio.
On a dime,
it's
right.
Averaged in the mid 40s for the last 100+ years. It's coming out of the ground at 7 to 1. It's disappearing in nature. It's increasing in its uses globally, from, you know, everything from military to photovoltaic, which is of course the solar panel, anything.
EV market, especially at the onset,
and the monetary side, right?
And especially with the EV market right now with the new batteries, which, you know, most of the time when we talk about technology, especially with silver, you would think, and most people would think, that, you know, with the advancements in technology, we wouldn't have to use as much silver for that. Well, the actual inverse is the case with these new batteries, is that the new technology for these solid state batteries use a lot more silver. So again, 50-year deficit, it's only going to get worse. We're using more and more of it as time goes on. Zach Ryan
Hang
wants
on,
to know.
before, I
Yeah.
want to read one thing that Michael said, then we'll move on.
Is it going to be that word again that you
No,
can't pronounce?
No.
Okay.
He said the bull trend is underway, but he was talking about 2011 when it went up to 50.
Yeah.
He said bull trend was underway, but the real explosion began in September 2010. There was a major first price surge for the next 3 months and then a sharp drop month in January 2011. No doubt many investors considered that a top, but it wasn't. Then came the most powerful part of the move. MSA fully expects to see a corrective jolt at some point in the current upward process, though not near current price levels. We'll be monitoring for any such pullback and inform best we can. However, our main assessment is that any such pullback before getting to levels that we think will be achieved to flush out any nervous and late joining longs, of which there'll be so many, is a buying opportunity. So, be careful. And this sharp move could just be sharp and quick. Yes, hogs get fed and pigs get slaughtered, but I promise the world I will not be the guy that doesn't say, hey, it looks like this is running out of gas. And I use all of the information you can find and then take it and put it together and decide, is this something we should do? Michael is one that deals all about momentum, and he's very different than everyone else. He's very successful. So momentum is a big deal when you're talking about the amount of energy that will be piling into this market. So
yeah, and I think that it's important that everybody out there knows, we don't greed is not good. It's nice to make money, and as we see, I know everybody's ecstatic where metals are right now. But as Andy always talks about, the people with Bitcoin, they take some, they make a profit, they take it off the table, they buy some metal, a hard asset that you can actually hold, feel, and sense. Well, with silver, as we see it go higher, it's not just an all or none type of situation where you get out of silver and into gold. And I think that's an important thing. You take certain pieces off the table, you peel back a little bit of the layer of the onion every so often. We have plenty of clients that are sitting in silver now that are well north of 100% return. Now, I won't say that many of them have started a swap to gold even right now, and I think that's probably smart. We still have some room to go. But as we start getting a little bit higher, I do think it's a good idea that you start, at least in your head, formulating some type of plan, because planning is good. You plan your work and you work your plan. You take a percentage off the table on silver, you put it into gold. Another leg up in silver, you take another piece off, and you put it into gold. I know that's how certainly Andy has built an empire for himself on these trades, because they do come just a couple of times in a lifetime.
For over a century, the gold to silver ratio has served as a barometer for balance between the metals. In normal times, it sits around 40 to 1. Today, it's doubled that. Andy Schectman sees this as a rubber band stretched to its limit. And when it snaps, silver will move violently higher. He reminds us this has happened before. In 2010, when the GSR was 85 to 1, those who swapped gold for silver saw the ratio collapse back to around 35 to 1 in just 7 months. That trade more than doubled returns compared to simply holding gold. History, Andy argues, is about to repeat. Momentum analyst Michael Oliver backs this up. He says silver's lid is coming off, and the market could shift from steady gains to near vertical acceleration. In past bull runs, like 1980 and 2011, silver didn't creep higher. It exploded, outpacing gold by multiples. If gold pushes further into record territory, silver could easily overshoot to $100, $150, or even $200 an ounce. And the fundamentals today are even stronger than in the past. Unlike gold, silver is mostly produced as a byproduct of other metals like copper and zinc. That means when demand spikes, supply can't just ramp up. At the same time, industrial demand is surging. Solar panels, electric vehicles, and new solid-state batteries actually require more silver, not less. On top of that, the U.S. has now designated silver as a critical mineral, effectively putting a floor under the price. Meanwhile, big money is waking up. Institutions from hedge funds to the Harvard Endowment are quietly piling into metals, while central banks are buying gold at record pace. With global deficits soaring and the dollar weakening, precious metals are regaining their role as a safe haven. And silver, in Andy's words, is the most undervalued asset of them all. But he's also cautious. Andy stresses discipline. Don't treat this as an all-in, all-out bet. Instead, peel off profits in stages, take some silver gains, rotate them into gold, and build strength as the ratio normalizes. That's how he's built wealth over decades, not by chasing tops, but by staying ahead of the cycle. For Schectman, the message is clear. The window is closing. The gold-to-silver ratio will not stay irrational forever, and when it reverts, silver holders will be rewarded in ways that most investors can't yet imagine.
Yeah,
I'm
and we're
certainly
we're
excited to
not
be on
at
this
the
ride.
silver to gold swap yet,
Yeah.
but we will be certainly watching that very closely. And just for people's, own understanding of this, the first YouTube video I did was with Bix Weir, and I want to say it was 2010. And talking to Bix, and he says, Andy, the gold to silver ratio is at 85 to 1. This was in 2010, and I start digging. I'm like, that's the I can't, as far as I can tell, that's only the second time in human history it's been that high. I said, we need to do a video, and we need to tell everyone to sell me their gold. I'll sell it to the marketplace. We'll switch them into silver. And we did. And within 7 months of doing that, the price went to just below 37 to 1, like 36 or 35 to 1 even. So let's just call it 35 to 1 from 85 to 1. 7 months earlier, you took 1 ounce of gold, would get you 85 ounces of silver. 7 months later, with $1,915 gold and $50 silver, which at the time was 37 to 1, but it went a little lower than that. When I started telling people to do it, it was at 37 to 1, and you would have only needed 37 ounces of silver to buy that 1 ounce of gold. You would have made over twice plus what you started with. This is the theory behind it. And when you talk about long-term historical averages, the further away you get from historical averages, the greater the magneticism that pulls you to the mean. I like to talk about baseball players. That would be kind of like your favorite baseball player who gets 600 at-bats a year in the big leagues, starts out the season batting 700. There's been one baseball player in the modern era that's batted 400. It was Ted Williams on the last day of the season. He just barely like 401. There's been no one else that ever has. So if in that respect, regression to the mean would say you go to Vegas and bet everything you have that he won't bat 400 or above.
Right.
No one's going to take that bet. But the point of it is that the further away you get from those averages, the greater the likelihood that we return to the mean. And that's exactly what we've seen. But I'll tell you, this has outlasted everyone's expectation. I mean, literally, this has been, and that's the old saying, markets can stay irrational longer than people can stay solvent. So
I don't think this is irrational.
we'll get there.
This isn't irrational. This isn't. I mean, remember, and to remind everyone, when silver, at least back in 80 and 11, went to these peaks, they did not go at a very steady rate.
No, I'm not talking
surge.
about the price of silver being irrational. I'm talking about the ratio between the two being irrational. From a historical and geological standpoint, it is.
Oh, that is.
And you're right. Those peaks that we saw in 1980 and in 2011 were blow-off tops. It just feels that this time is different because the West in particular is classifying gold and silver differently than they ever have.
No doubt.
And putting silver as a critical mineral is something that you can just assume that they've put a floor under the price. That's what I assume. And to see the amount of imports coming into this country, it's not tariffs, it's much deeper than that. I would say that this is the beginning of a new monetary system.
And I'll tell you, I know that from a business perspective for Miles Franklin, we're feeling it. It's different because, I mean, even today, and we have been busier on a retail perspective than we have in a long time.
Yes.
And our inventory levels are not what they were.
No, because all of the dealers have been choking on inventory, so they haven't had a need to go out and buy more. And remember, how many times have I said, just like that, it changes instantly. And, we've been doing a lot of several $1 million orders every day, not just 1 or 2 a day, but several big orders that have drained the inventory. And now you got to go out and get it and compete with everyone else and get it largely from around the world
and pay up for it.
And so it's a weird time. Talking with Rick again this morning, he re-echoed 0.5% allocation, but that's changing. And I always used to joke 0.5% from Joe and Jane six-pack to the Harvard Endowment Fund. But the Harvard Endowment Fund just bought a whole bunch of gold a couple weeks ago. The big money is waking up to the need to protect themselves from what is considered traditional. And that used to be in the form of bonds. But who the hell would buy a 4% bond with 7% annual money creation and a dollar that's down 11% this year and $2 trillion deficits? And, you know, and so I think the world is waking up to that for sure.
So here's the bottom line. The gold to silver ratio is collapsing. History says silver always lags gold until it explodes past it. Andy Schectman's direct message to investors is simple. Silver is still undervalued. The rally could be violent and fast. Don't wait for headlines. By then, the easy gains will be gone. Now I want to hear from you. Do you think silver's next stop is $50, $100, or even $200 an ounce? Are you holding more gold or silver right now? And why? What's your personal strategy as the GSR snaps back? Drop your answers in the comments below. Your insights help this community stay ahead of the curve. And if you found this video valuable, make sure you smash that like button, share it with other investors, and subscribe to Macro Edge for more urgent updates on gold, silver, and the coming monetary reset. The time to prepare is before the rush, not after it. Stay sharp, stay prepared, and I'll see you in the next update.